Welcome back. Well, JSW Energy has completed the acquisition of Mytrah Renewable Energy portfolio. To alert our viewers, Mytrah portfolio assets have long-term PPAs with an average remaining life of around 17 years. To discuss this, we're joined by Mr. Prashant Jain, the joint MD of the company. Hi, Mr. Jain. Good morning. Thanks so much for joining in. Well, the last time we chatted, you said that in that fiscal year, that's FY23, it'll get completed. Well, you made it. So good on you. But what are the synergy benefits you'll get post this, this acquisition? And also, you were talking about the EBITDA number going up by close to around 450 crores. That's on, right?
Good morning, and thank you, Nigel. Yes, we are on track, and we talked about the synergies in terms. First is the capacity expansion and increase in our renewable portfolio. Second, the majority of their assets are close to our assets, which are being constructed in the state of Tamil Nadu, where we are building SECI 9, SECI 10. So there will be a lot of other synergies in terms of O&M and other supply chain will be coming to us. And we explained to the market that there will be an additional EBITDA improvement of between 400 to 450 crores over a period of 12 to 13 months time frame. We will achieve that. So I can see that the exit run rate in the month of the March 2024 will be with the increase of 400 crore rupees EBITDA in Mytrah portfolio.
Okay. Any indication of what the EBITDA growth would be post that? Once the 400 to 450 crores, is that an annual run rate that you're looking at?
So this asset was making an EBITDA of around 1250 crores. So this EBITDA will go up by another 400 to 450 crores. So between 1650 to 1700 crore will be the EBITDA. And that's what we explained, that on a normalized EBITDA of 1650 to 1700 crore, the enterprise value is 10,200 crore. So this is close to 6 times EV/EBITDA, which will be value accretive for shareholders from the day one.
Okay, 6 times EV to EBITDA and value accretive for shareholders from day one. Got that. Can you tell us a little bit about the opportunity as far as the PLI scheme is concerned for which you've applied? What are the incentives that you are eligible for at the moment? You have a stated target as well of 10 gigawatts by 2025. Do you hope to achieve, are you on track to achieve that? And is this, if you can just run us through, what the next 12 to 18 months would look like as far as the opportunities in the PLI scheme?
So two things. One is on the capacity front. Yes, we gave a guidance of 10 gigawatt by FY25. So we have already logged in 9.9 gigawatt, which we will be completing by June 2024. So we are much ahead of the schedule, what we have talked about. In addition to that, we have already logged in close to 3.4 gigawatt of the storage opportunities also. So we are ahead of schedule. And in terms of the PLI, India is not having enough supply chain for the solar panel availability point of view. That's why the government has come out with a PLI scheme, and we decided that we will be setting up a wafer, cell and module facility for a 1 gigawatt capacity. We have got 320 crore PLI under that particular scheme. We will be spending close to 1600 crore rupees in the capital expenditure. This asset will be primarily used to meet our captive requirement, because we are having a target of 20 gigawatt of the generation capacity by FY30. So we will be requiring quite a lot of capacity for the solar panels, and we will be importing in the interim polysilicon and then manufacturing wafer, cell and modules.
Well, Mr. Jain, could you tell us what's the value unlocking part of the business then? Everyone was saying you're going to scale up, and then in fact the green part of the business, there could be some value unlocking. What's the way ahead? Will you do an IPO? Will you get an PE in? Is there an InvIT you're planning? Give us some kind of a time frame, and what could be the likely outcome out there?
So we already outlined it, that our idea is to increase the capacity and build the business, and we are on track to build that. We have already done the restructuring of the business at this point of time. So JSW Neo has been constituted, which is housing all the renewable business of the company. And so we are ready in order to tap the opportunity whenever any suitable opportunity comes in. We need to keep one thing in mind, Nigel, that we are generating close to $350 million free cash every year, and it is going to grow as our capacity is increasing. And we are deploying that for the growth. So we have enough cash available at this point of time. However, as we did this acquisition of Mytrah, we are looking at a couple of more acquisitions as well as other growth opportunities. Hydro pump storage is another one opportunity. Green hydrogen is another opportunity. So we are looking to tap the capital from the like-minded people who are believing in the India story for the long-term perspective. So sooner than later, this will also happen. And I cannot put the timeline at this point of time, but I can tell you that, yes, we are in discussion with some people.
Okay, so you're saying that a couple of more acquisitions on the radar, the hydro pump storage space, the green hydrogen space is what interests you. Have you earmarked any kind of, war chest for these acquisitions? I mean, how much would you be pumping in? Will it largely be from your cash or your internal accruals, or would you look to tap the market?
We are a highly underlevered balance sheet, Sonia, at this point of time. We have already given a guidance that we will be spending close to 10,000 crore rupees every year for next 10 years, which can be done from our own internal accruals. And also we can lever up a little bit of balance sheet to do acquisitions. And at the same time, we will be looking at tapping the capital markets through the strategic investor or an IPO route at the JSW Neo level at opportune time. So everything is contingent upon the right opportunity at right point of time. But what I can say that we are absolutely future ready.
All right, Mr. Jain, final question before we let you go. On your thermal capacity, that is, 20% is not tied up. So that gets the benefit of higher prices as well. So on the thermal side of things, could you tell us how is demand? Last time you joined us, you said it's rock solid. And give us a rough update on the merchant rates as well.
So power demand went up by 8.5% last year. March was subdued because of the unseasonal rains throughout India, because of which the demand contraction was there. And that is still continuing because we are seeing still the rains are in various parts of the country. The power prices were ruling close to 8.5, 9 rupees, but now they are down to 4.5, 5 rupees. And I am quite upbeat about the power prices in time to come. However, recently last week, the cap on the merchant tariff have been reduced from 12 rupees to 10 rupees. I feel that is not a fair move by the government. It is well understood that it is the election year, but if there is a cap, there should be a floor price also. When power companies bleed, there is no floor, and still, power is being sold at 50 paisa or 1 rupee in certain time blocks. So if there is a cap, there should be the floor. But however, I am very, very much upbeat about the power prices in time to come because demand is growing quite robust and enough supply is not coming up.
Yeah, no, that you highlighted last time you were on as well. Mr. Jain, just one last question. We've been reporting how distributors were asking for hikes, and some of these hikes are coming through. I mean, so for example, in Maharashtra, it has happened. In the city of Mumbai, that's going through from the 1st of April. Some of the other states, it's going through. Although in states like Bihar, there has been a bit of a pushback. Could you tell us what is the overall aggregate situation, and in what way does it impact you?
So it doesn't impact us because we are not in the distribution business. And in any case, distribution business is also regulated one. So as the power prices go up, because, you need to understand that there is an inflation in everything. When the railway freight goes up, coal prices go up, or the transportation cost goes up, there is a power prices go up. And then when the power prices go up, the regulator decides a higher tariff for the consumer. And this is how it works in. As far as JSW Energy is concerned, it doesn't impact us. But yes, the thermal coal prices and as well as the power prices will keep inching up by 3 to 5% year on year.
Okay, all right. Mr. Jain, thanks a lot for joining in and speaking to CNBC-TV18. That's JSW Energy. With their plans going forward, both in terms of growth, they're looking at 10 gigawatts by FY25. They've locked in 3.4 gigawatts of storage opportunities, and they're also looking at a couple of more acquisitions as well. So the